Good morning, everyone. I want to start by welcoming you. My name is Chris Pokrivnek, and I serve as a member of the St. John's County Chamber of Commerce Board of Directors, and I'm also a Regional Vice President at VyStar Credit Union. Today, I'm going to be your host and moderator for this morning's panel discussion. Today's virtual discussion, as all of our world is now virtual, is the second in a series of 3 workshops that we've collaborated, that there's been a collaboration, between Chamber and VyStar. Today's focus is going to be on ways to take action for your business. As your host, I am lucky enough to be able to introduce a panel of distinguished experts who will share resources and insights to assist you in your business. Today, we are joined by Meghan Beatty, a small business banker with VyStar Credit Union. She's a native of Atlanta, Georgia. Meghan graduated from the University of West Georgia with a Bachelor's of Fine Arts degree. With more than 18 years of experience in the financial industry, Meghan's background includes both retail and commercial banking experience with BB&T, SunTrust Bank, and currently her current home, VyStar. At VyStar, Meghan specializes in working with local small businesses in the Jacksonville and St. Johns County markets. Meghan served on the board for the Kennesaw Business Association in Atlanta and serves on the Allocations Committee for the United Way of Southwest Florida. She was also a member of the Venice Rotary Club. She currently resides in St. Johns County, where her 2 teenage daughters attend school. Welcome, Meghan, and thank you. I'm also excited to introduce Tracie Cotto. Originally from Pennsylvania, Tracie has been coming to Florida to visit with family most of her life, and 3 years ago fulfilled the dream to relocate here to Flagler County. She graduated from Kutztown University with a Bachelor's of Business and specializing in marketing. With over 20 years in the financial services industry, Tracie has primarily worked with larger financial institutions as a branch manager, focusing on business banking. In 2018, here at VyStar, we were lucky enough to have her join our team as a small business banker. Tracie specializes in working with small businesses in St. Augustine and Palm Coast. Tracie, thank you for joining, and we're really happy that you were able to join today. I would like to introduce Michael Scine of Scine CPA Advisors. Michael holds a Master's of Science in Taxation degree. That's a mouthful of a degree, but I like it, from Fontbonne University in St. Louis, and a Bachelor's of Science degree in accounting from Flagler College. He's a certified CPA from the Florida Institute of CPAs. Michael specializes in corporate and individual income tax services, helping businesses and individuals navigate the world of taxation. His area of expertise include corporate tax planning and compliance, partnership tax planning, federal tax research, QuickBooks training, and accounting system implementation. Michael has volunteered his professional services for more than 8 years to the Chamber and previously served as a chairman of the board. He is the current chairman of Chamber's Public Policy Committee and a Leadership St. John's 2014 and 15 graduate. Michael is also a committee member of the Northeast Florida Bridge Loan Program with the SBDC of Florida. Michael, thank you very much for joining us today. And finally, I am pleased to introduce Dominic Scine of Scine & Associates. With extensive training and experience in accounting infrastructure development, cash flow needs, and tax strategies, Dominic and his firm have developed an industry niche, working with government contractors, professional service firms, nonprofits, and faith-based organizations. Dominic acts as CFO and controller for his clients when they need to outsource their finance department, placing it in the experienced hands of a dedicated team. Dominic and his team specialize in online accounting software, outsource accounting, government contracting, CFO services, and business development. Dominic is also a chamber member and active in the St. John's community. Welcome and thank you as well, Dominic. So before we dive into today's workshop discussion, I'd like to take a couple minutes and just talk about the format. First, we do ask that everybody that has joined today remain muted for the discussion portion, just to minimize the background noises and so that everybody can hear clearly. We'll begin our panel discussion with some questions that were submitted in advance. We want to make sure that we address as many questions and concerns that you have, and ask that you submit your questions using the chat function. And if you're not familiar with Zoom, it's right there at the bottom in a little chat bubble. Just click that button and it'll pull it right up on the right side. We'll field questions throughout the discussion. And before we conclude, we invite you to join our panelists for virtual networking and an opportunity to ask any additional questions, maybe dive a little bit deeper on the topics that we covered today. And now, without any further delay, let's go ahead and get started. So I'm going to ask a couple questions and I'm going to kind of point them in a direction a little bit here. So for Meghan and Tracie, we'll go ahead and start with Meghan. What is the proper way to set up your business, establishing it on Sunbiz, and the proper designation of your business?
Well, first, for starters, you want to make sure that you are to do business in the state of Florida. So Sunbiz is very crucial. It's one of the first things that lenders look for as far as making sure that you are established within the state of Florida. Also, you want to think about what your ownership is going to look like. And then I know, Dominic and Michael, you guys might chime in on this as well, because a lot of times they seek advice from you on this. But, if it's a situation, you just have to think about where you're at right then, and if it's going to be appropriate. If it's just you and it's a sole proprietorship situation, you don't plan on employing anyone, you don't plan on doing subcontracting, anything like that, you want to make sure you take all those things into consideration. So thinking about what the ownership is going to actually look like is very crucial, and making sure that it is put into the proper vessel, whether it's a corporation, an LLC, a sole proprietorship, a partnership. And then the proper way to do it, you want to make sure that you have all of your documentation in process, researching how to set it up. There's a timeline that goes along with that, and I know Michael and Dominic, Tracie, you all can speak to this as well. It's going to take time to get the EIN numbers and establish yourself with the IRS. It's going to take time to get whatever organizational documents that you need to establish, set up and put in place. And making sure that you have, honestly, at the end of the day, a business plan. You need to know what you're wanting to do, what your mission is, what your vision is, how you're going to get there, and what resources you need in order to get there. Because if you just go into this saying, I'm just going to be a carpenter, I'm just going to go and fix things, well, you've got to have some sort of direction. How are you going to get your clients? What are you going to do to market yourself? What does that look like, in order to be able to move forward with that? And you have to have kind of a growth plan in place, so that you have something in mind, a direction that you want to be heading into. So hopefully that answers that. And if anybody else, please chime in, Tracie, Dominic, or Michael.
Sure. I would say, as far as the different designations that you also want to take into consideration, for an example, when you were talking about the sole proprietorship, that is just you as your business, and it's not a separate legal entity. And so everything is in essentially your name. And if there is any type of liability situation, that they can come after you directly, you and your assets, your personal assets. Whereas if you're to work with an accountant, a CPA, to set up a separate legal entity, such as an LLC or an S Corp or something along those lines, then you're able to take some of that liability off of yourself personally, and put assets into the business name, and there's a separation which can protect you as well. But I do want to reiterate about the Sunbiz as well, as it's very important to make sure that that is set up properly, and that you actually have owners on there. That's one of the things that we do come across a lot, is that whenever you're registering, you'll have a registered agent, but not actual members or people who are authorized to do business on behalf of the business. So that is important to make sure that that is done, and that each year that you're updating it and making sure that it's current.
One quick thing, I always think people, just to echo what you're saying, there's two different, when you set up an entity, there's a state of Florida, which is SunBiz, which is that LLC or whatever entity you're setting up. You also have the federal. So there's two different jurisdictions you're working with in this setup. So I just wanted to always point out that if you don't, when you set up the state of Florida with SunBiz, you're setting up one thing, but you always have to elect to be a different, potentially a different thing at the federal level. So just keep in mind, you have two jurisdictions. You have the SunBiz, which is the state of Florida, and then you go to the IRS to get your ID number. And for example, if you set up an LLC, you can have different types of elections within that. So that's more technical, but I just want to point out, you have to consult with somebody to realize you're dealing with two. Often what happens, people set up an LLC and they'll go to their bank and set it up and they'll forget about the federal election. Even though you need the ID number, you can get that, but they forget to have that LLC taxed as an S corporation or a partnership. There's what's considered default classifications. If you do nothing, you're going to be pigeonholed in one specific thing, depending on whether you're a partnership or a single member LLC.
We did have another question, and this one's really, would be really interested in everyone chiming in on this. So we'll start with Dominic, actually, because, you know, you could kick it off with this question. How important is it to have a relationship with a CPA or someone that can act as an advisory role along with your banker?
Sure. So, you know, business owners tend to really focus on sales and kind of a lot of different things that a CPA or a financial advisor or a banker, they're focusing on something different, right, than what the CPA or the banker is thinking about for them. So in the perfect world, you're building a team of people around you to support your business, and absolutely a good banker that can look at your financial statements and understand what's going on a little bit, a good CPA that's watching out from your tax situation and that's trying to project where you're going and what you're doing. Those are critical team members to any strong business. Doing it alone is one way to do it, but you will often find yourself being very alone and not really getting momentum you're looking for. Just be honest, as clear as I can say it. We have found that successful businesses build a team around them, and that's how they become successful, because we cannot do it all ourselves. So it's critical to have a CPA and a business banker with you.
Love it. Thank you. And I know from the banking perspective, we do see a lot of businesses that don't really know where they are in their business cycle. So where they are and how they're trying to get to, you know, B, C, D in their process. Tracie, do you have any tips or advice to, you know, help them understand where they are and how they might be able to partner with their banker in regards to their business cycle?
I think it's important to just have regular appointments where you're sitting down and discussing what are the short-term and long-term goals for the business, what you're trying to accomplish, because there's always a delicate balance too between working with the CPA to minimize the taxes that the business is responsible for, but also showing enough cash flow so that whenever you are looking to be able to do some lending, that you're showing enough cash flow in your business and your personal taxes to qualify for the things that you're looking to implement and put in place for your business going forward. So and if you can work together as with all three of them at once, I think it puts you in a better position.
Absolutely.
No, I really like that. I love the, you know, we all do operate better with the team around us. And I don't know if Meghan or Michael, if you have had any color to add to that as well.
I think Honestly, I mean, I'm always advocating to have a good marriage with your CPA, because, you know, a lot of time business members don't think about where they're going. They're living in the now, and especially in this environment, I hate to say the COVID environment, but where we're at, we're in survival mode. And so a lot of businesses aren't thinking about the future. They're just thinking about staying true or where they're at and staying afloat. But, you know, I think that, you know, if you know in advance, to Tracie's point and Dominic earlier, creating a balance between, you know, what you're reporting, what tax savings you can do, but then also, you know, what you are reporting as income is crucial. It is. We get backed into a corner as lenders so many times because the business owners become very focused on, you know, keeping as much cash in their pocket as they should, but when there's a lending need, it may be more difficult because on paper it looks like they can't support it. The balance sheet, it looks like you can't support it, and we have to make sure that if they know that there's going to be something in an expansion, things like that, you've got out what your balance sheet looks like now and where you want it to be, so that you will be able to execute whatever forecasted growth you're heading towards.
Just to add on to that a little bit, it's similar to what you do whenever you're looking at it from a personal viewpoint, because everybody feels more comfortable talking about, okay, I want to buy a house and what that would look like and what steps you have to take, and minimizing your credit card debts and your debt in general, and maximizing your income. It's sort of the same situation whenever you're talking about the business side of the house as well. We need to make sure that the overall cash flow, the debt service coverage, which is similar to DTI on the personal side, is there to show that we can support the lending request.
Perfect. Thank you. So I did want to kind of find a balance also, because obviously, Meghan, you touched on, you know, businesses just trying to survive right now. And some of the things that we're seeing are I guess, businesses that need lending or need support, and they might not be prepared. And I'll point this towards you, Meghan. What do financial institutions look for when we're really considering commercial lending or financing?
Okay, so this could be kind of a two-part question. Overall, as far as you know, what lenders are looking for when it comes to any type of need. The biggest thing is the purpose. Sitting down with the business and finding out exactly what they're wanting to do and they're trying to accomplish, because 9 times out of 10, the purpose they come into the door with and what they're trying to do, the product that they're looking for isn't necessarily the right fit for what it is they're trying to do. And for example, you have a trucking company that's coming in and they're wanting to expand and look at, say, upgrading their vehicles and things of that nature. So they come and they say, well, you know, I'm going to sell off some old inventory, old vehicles, and then I want to just upgrade and buy some newer ones. I think I just need a line of credit. Okay, well, is that really what is going to be the best thing for them? You know, because one thing, a revolving line of credit, a lot of business members don't think about, it doesn't force you to pay it down. It doesn't force you to lower that liability on your balance sheet. It doesn't put you in a position to where that debt would go away, which, to Tracie's point, you know, reaching another financial goal. So maybe it's more of, we look at doing a term loan on that piece of equipment, you know, and educating business members on what you would necessarily use a line of credit for. So to your point, Chris, in this environment right now, so say we're having trouble making payroll. We've got businesses that are trying to keep their employees coming in their doors. You know, they're wanting to stay open. So in those types of instances, yeah, you might need something like a product of a line of credit, something in that direction, because it is revolving. You can utilize it for many things. Payroll, operating expenses, and things like that. But then also, as your receivables come in, you can pay down on that. So that's a good emergency. Just like on your house, having a line of credit, a HELOC, case of an emergency. hurricane, insurance checks don't come in fast enough, you need your new roof put on. This is a good bridge to be able to support that gap. So it's just a matter of educating business members and really talk about that. So one of the number one things that we look for is, one, back to my point, purpose. What are they trying to accomplish? Another thing that we're looking for is, where are they at as far as their balance sheets and income statements? Are they making money? Are they breaking even? Where are they at? Because you want to make sure you don't ever put a business member or a business client in a situation where they can't afford what they're trying to do, because that just defeats the purpose completely. So having up-to-date financials is crucial. If you can manage, we have some businesses that are like a quarterly update where they go in and they update their balance sheets quarterly. Some do it monthly, some do it annually. Annually makes it a little difficult. So you really want to know that the business knows where they're at financially to make sure they can afford what it is that they're asking for. So the second one, first one, your purpose. This is updated financials. The third one is, are you nurturing personal credit as well? Because a lot of lenders are going to look at you on the personal side as well, because basically what credit does is it identifies behaviors, your character, so the way lenders will look at this is, what your personal credit behaviors might look like. And I'm just going to be very blunt. A lot of that is going to carry over into your business. And Dominic and Mike, you guys might agree with me on this, or you may disagree. We see a lot of those behaviors carry over onto that side. So a lot of lenders will look at that. So we always tell business members, make sure that you are, nurturing your personal credit and you're not leveraging yourself too aggressively on that side. So I would say, and Tracie, please feel free to chime in, those are probably the top three things that a lot of lenders will look for from business members when there is a lending need. But if anybody else has anything to add, please feel free.
I'll just echo that. Excuse me, sorry.
Nope, I was just getting ready to ping you actually, because I saw a lot of head nodding. So I was just going to ask you.
I was going to follow up with that. Yeah, and just say, as a consultant looking at a set of financial statements, we will often see a misaligned use of funds, of lending money. And to piggyback off of your point, Meghan, we had a client that took a line of credit and used it for a long-term asset. And you could imagine that, if you're trying to match, your revenues and your expenses, and you're trying to properly align the finance side of your business, when you buy a vehicle and that vehicle is going to eventually be worth nothing in 5-8 years, maybe we should make sure that you don't owe anything on that vehicle in 5 or 8 years as well, right? So we're starting to align and match some of the debt structure with some of the asset position, so that we can actually kind of match that together and grow the business in a certain way without being having a situation where we're still paying on debts, but we don't maybe have the asset anymore, or vice versa, right? Of course, we want all the debt gone as fast as we can, but that's not reality in most businesses. We have to align things properly. So Meghan, you're exactly right on that. We see that all the time. We will restructure a debt agreement to kind of match the long-term position they're trying to do, or to kind of pull it out and make it be a line of credit because you're using it as working capital. Yeah, great point.
Thank you for adding that. No, I'll keep it with you, Dominic, and you, Michael, as well. We talked about financials a little bit in that last question. What advice would you give for a business to stay? How frequently or often, or what should their processes be with their financials to stay prepared to be eligible, or to know where they stand in terms of lending opportunities or what they would need? I think if we're learning anything, we're learning that it changes the drop of a dime, right? What would your suggestions be around that, around keeping the financials prepared?
Yeah, sure. I'm sure Michael will jump in here too, but what in the work that we've done with clients, I can tell you that there's a few things that rise to the surface. And I'll say this, awareness of your financial condition gives birth to a level of confidence in your business that most people just don't have. Most people put their head down on their pillow at night and they're running a business and they say to themselves, all the things come back to them and they wonder how they're doing financially. They wonder what it's going to look like next month. They're constantly in a state of wonder. And that state of wonder gives them a state of panic, a little bit of stress. It gives them a whole level of, use of their mind power and their resources and their stress. All these different things kind of go there. When if they just kept their financial statements clean, clear, consistent, and they understood them, a lot of that stress would just go away. They would be then in control of their business, steering and turning right when they need to turn right, or turning left, or when they would be much more in a position where they can see an opportunity, they can go for it, which is totally different than most businesses when they kind of just say, I just need a financial statement just to kind of have it. It's something I need to give to my, my tax person or something like that. The financial statement becomes a tool to give you the confidence to go forward, and it gives you the awareness to understand what opportunity to go for and what not to go for. So that'd be my take on keeping a financial statement up to date. You can't just say, produce my financial statements, and I mean, like, now that I have it, now I understand it. You've got to work with it, be knee deep in it, process it, watch it grow, watch it decline, understand it, and become in tune. That's what the experienced business owners will do, is they will spend time in that game and understanding their financial statements, not just from a rear view mirror standpoint, looking backwards, but also saying, how do I take that and go forward with it? And that's a different echelon of business owners that we find. Some just kind of like pay a fee to get my financial statement. Some actually pay a fee to say, what will my financial statement look like in the future? And that's an entirely different type of business owner. So that's the clearest reason I think I can give you the why you need to keep your financial statements up to date.
Yeah, just to echo what Dom had said, I think we're always in a process of educating clients, and it always seems to go the same path every time. Absent any information, they look at cash. Cash, cash, cash. What's my cash balance? Well, if you think about it, they don't have any financial statements. That's all you have to go by is cash, right? So that's what causes a lot of stress in people saying, oh, I need more cash. Where's my cash? That's because they don't have a grasp on the rest of their financial picture. So we take people that are thinking in cash terms and we bring them, at least we want them to graduate to thinking profit and loss statement. What's your gross revenue? What's your cost of goods sold? What's your net income? And then you have a little clearer picture. You're no longer thinking cash, you're thinking profit. And then we try to take those people and bring them into the balance sheet and say, what are your liabilities and your interest? And then we look at multi-year planning, which I think is the next iteration of that. So I think we're in the process of constantly graduating people's train of thought from cash to P&L to balance sheet to multi-year financials, statement of cash flows. And with every single time you guys, like Dominic had mentioned, that brings this level of certainty to their own numbers and a sense of command and control over what they're doing. And once you learn how to read those financial statements, you can actually talk to a banker, and the banker will actually be impressed that you know your own business instead of being left kind of just, oh, I know what my cash balance is, and I made $400,000 last year. Well, is that gross or net? Hold on, let me think about that. You should know those terms, right? So I think we're in a constant state of graduating people, just to Dominic's point, to make sure that they are confident in what their own business is, and put them in the control seat. And that's what financial statements do for people.
I'll say one more thing real fast, Mike, just to piggyback off that. If you're looking for a really great tip that a great business coach taught me a long time ago, and I copied it, and I tell my clients to do it as well, is just for a month, keep a little notebook next to your nightstand. If you're a business owner, right? Keep a notebook next to your nightstand, and before you go to bed, write down the things that stress you out about your business. Just write them down. You're not solving them. You're not trying to come up with a master plan. You're just saying, gosh, I wish I would have done that. Write it down in that little notepad. And then in the next meeting that I'm with you, we'll go through that notepad. And chances are those things are financial related. and they're like, I don't know what my sales are next month. I don't know what this is. And just getting them on paper changes your world. It's amazing what it does. So yeah, pragmatically, that's a little tip to do something with, to get it out of your mind, to get your CPA or your banker to help you tackle those big things and move on.
Fantastic. Thank you very, very much. So I do have one more quick question, just in regards to, you know, we've had our current times come up a couple of times, and I'll turn to you, Michael. And, you know, if I'm a business that has received PPP funds, what should I make sure to do so that loan is forgivable under the CARES Act?
Yeah, this is the $1 million question for everybody right now, right? What can I do? What can I do? What I'll say is this. I think, you know, working with your banker, because the bankers you guys have been trained to handle these questions and try to help people work through these. So on the front end, unfortunately, I wish they would go directly to you. Sometimes they come straight to us for some of these answers, and we're helping them put together the numbers. I think the biggest thing that you can do is to make sure that you're using the funds for the intended purpose. And a little bit of this is kind of a little too late because everybody's gotten their money and have already spent it, right? So I think the people that you know, set up separate bank accounts to funnel that money through are going to have an easier time tracking where that was. The people who have good accountants on the back end that are tracking the numbers and putting them in the proper locations in the balance sheet or the P&L and accruing your expenses properly and flagging those. I think those people are going to have the most successful forgiveness on that. I think I'm growing less and less concerned about the forgiveness when they extended the number of weeks that were allowed. So that kind of opened up a whole new window and alleviated a ton of pressure for everybody. But I will say, I think somebody had just asked, yeah, 8 weeks versus 26 weeks. Yeah, I think doing the extended weeks is going to be critical to giving your forgiveness. So you want to pick that extended week period because it just allows you to have more expenses in your forgiveness. I will say attention to detail is going to be the most critical thing that you can do. A lot of payroll companies are offering schedules to help you calculate for that. So yeah, somebody had asked about 24 weeks. Yes, pick the 24 weeks as your extended period. I don't know. I can't really think of why somebody would pick the 8 weeks off the top of my head right now. I'm sure there are some case studies for that, but if you have more time period to pick the 24 weeks, then go ahead and do it. There's a couple of things I want to point out that I think are going to be sticking points in this, and I'll go through them really quickly. When you pick your payroll period, that their 24-week period, you can start it from the first day the payroll loan was dispersed, or the first pay period. So just be careful about which date you're picking for the beginning of your 24-week. It depends on so that's a caution. Be careful with payroll costs that are incurred but not yet paid within that 24-week period. So you are allowed to include the incurred amount as long as you pay it by the next payroll cycle. So be careful of that. Also the same thing for non-payroll costs incurred versus non-payroll costs that are incurred but not paid within that 24-week period. For example, rent, and you miss it by 1 day for rent expense. There is some rules to allow you, as long as you pay it a normal cycle. You can't do prepaid rent, but you can allow your normal cycle for that. A couple other items to be cautious of is, I know a lot of people have tried to bonus out some payroll to their owners or to other individuals, key employees. Make sure that you be careful with that because there's a threshold for a calculation for that. The other thing I want you to be aware of is full-time equivalency. Just be real careful on how you're calculating FTEs, full-time equivalent. So you have part-time people, you have full-time, and then you need to make sure your full-time equivalent employees are where they need to be. And the calculation of that is going to be pretty critical. People sometimes, will guess at that kind of stuff. And I say for all this stuff, you need to get down into the details and you need to get specific and pay attention to details on this. Those are kind of my highlights. So I mean, I think those are the items to really be cautious of. I think if you're operating business as normal and you've paid your employees a normal amount and you've given that PPP money to your employees and you just maintain payroll and you paid rent, you're going to be pretty close to having all of it forgiven, if not all of it forgiven. The portion that is a little tricky is that advance on the economic disaster injury loan gets added to PPP forgiveness. So that's part where when you do the calculation, there might be a repayment on that advance money because that wasn't part of the original PPP. So just be cautious of those things. I'm sorry, it's highly technical. There's no way around it. And I think a lot of people are going to need professional help on this just because you want to make sure. Let's put it this way. If you go through the calculation and you don't have it all forgiven, reach out to somebody. And if you go through your calculation, you're stuck, before you submit it to the bank, talk to somebody because as long as you're doing what you should be doing in terms of the intention of that plan, you should have the majority of that forgiven. And I don't know if anybody else wants to chime in on that.
Well, from a banking and credit union point of view, we've been just advising our members to make sure that they're tracking their checks, so they're not just doing a transfer from one account to another, that they're actually writing checks for payroll. Or if they are using a payroll company, then we could certainly take documentation from them to support the claims. And it is nice that they've now reduced the amount that has to be used from 75 down to 60 for payroll. Does allow for other things. So it was mortgage, interest, leases, and then utility bills. Those are all able to be used for reimbursement for forgiveness as well. So just really good record keeping track of exactly what the funds are being used for, and being able to prove how the funds are used in the documentation.
Thank you, Tracie. I really appreciate that. And thank you, Kathy Heister, also for the questions. I really appreciate that. I did want to, since we're on this topic of, in emergency plan, for lack of a better term, I did want to ask Dominic, can you weigh in a little bit on the importance of a contingency plan or an emergency plan, and how you might best prepare for that?
Yeah, sure. So we prepared some contingency plans in our practice, and a contingency plan is, in my opinion, it is a way in which to reflect the ultimate leadership of upper management. And a contingency plan says, I, as a business owner, a leader of my employees, a leader of their incomes to their families, I have made a conscious effort to do my best to help compensate for some unforeseen circumstance so that they are taken care of and our business survives. And so it's a critical thing in perspective. When I watch a person go through a contingency plan and put it on paper, their worries and risks on paper, it completely changes their demeanor and their perspective of the business. So, first and foremost, a contingency plan, right? It's a written down strategy to handle an unforeseen event, right? Now it's unforeseen, so you're having a hard time trying to put this together because you don't know what's going to happen. But the world is changing, and thinking that we don't need to kind of think about unforeseen things is maybe something that the generation before us could maybe do, maybe not on some level. But when you got 9/11 and fires and hurricanes and COVID, and let's just start naming the list of unforeseen things, which really quite aren't. It's almost like we can say something unforeseen is going to happen. Get ready, right? Or it's a cyber attack. There's a lot of things that we need to kind of think about when we think about a contingency plan. But I'll say a couple of interesting things. We've learned a lot from 9/11, right? People really stepped in. There's a really great case study, and I can't remember what it is, but a contingency plan expert. I thought it was a phenomenal story where he made his staff. The company was kind of like a fitness company, and the fitness company would would have their routines of exercise and jog, and they'd have the normal life routine, right? And so he made everybody do that routine in reverse to keep them thinking that change is coming. Get ready. If you're jogging the same loop or driving the same way to work every day, just do it in reverse or go a different way, because you got to be ready for the unforeseen. This is the world in which we live, right? It's not, that's what's happening nowadays, right? You know, I'm reminded of what a great company did do back when in 9/11, and this has kind of become some of the gold standard of a contingency plan, right? Is they established a senior management team to have a direct help desk phone system, call-in system. Chances are in a contingency, a hurricane, an earthquake, a COVID, whatever, everybody's confused, and they need to talk to somebody who knows how to answer the question quickly. They're not looking to get the tech service rep to kind of transfer you to see if they can get a phone call. Get the people that are important at the top to answer the question right away, to get on the phone, because you're trying to take care of your staff, right? Another really critical thing that I thought was phenomenal of this this gentleman, I wish I knew the name of the company, I've just learned to utilize it, was he realized that if he had his staff create their own internal kind of contingency plan, right, then their staff would be taken care of, and then ultimately the company would also be taken care of. Because staff could go back to work when they could. They had their own methodology to handle emergencies, right? So he said, you take care of yourself first. I'm going to pay you and help you get your own personal contingency plan. And then once you're taken care of in case of an emergency, your family's safe, you have cash reserves, you have things taken care of in your own personal life, then you can come and help the business. And we're going to be better off for it, because we're all going to work together to do this. So a contingency plan is a really deep kind of process that shows your leadership. It cares for your staff. It really is the difference between kind of an operational business owner and a true business owner that's managing the company and thinking about things before they happen, right? And then the last thing I'll say on a contingency plan is, of course, you sleep better at night. You take these worries out, put them on paper. That's like the obvious piece. But the other side of it is that, you know, when pressure is on you, if you have thought about the various things you have to do when sales are dropping, or when you don't have cash, the unfortunate things you have to do, cut costs or work out the rent payment or whatever, if you have thought about those things, you do those things in a very systematic, organized way that has, there's not a lot of pressurized thought at that moment, and you make good decisions because you've already worked through them in the timeline. All of a sudden when something happens, and now your first time you're thinking, what do I got to do? Who's going to get hurt? How do I handle this? How do I do? That is the worst type of situation to do really good decisions, right? The best thing you can do is to actually think about this, model role play all the way through an unforeseen situation. Then all of a sudden you have a plan and you go forward with kind of a commanding sense of confidence. I talked earlier about, you know, how awareness gives birth to confidence. Like if you are just put it down, you will be confident going forward in your business. And so a contingency plan really helps kind of all those things. It takes care of your staff. You're the leader of the organization. It really gets you to the next level of being a business owner. So I hope that helps. There are a lot of fun to get through. There are emotional things of how far do I take this when you're working with a client a lot of times, because there's sad decisions you got to make sometimes. There's also, you know, just a whole set of emotions happens when you go through a contingency plan, and how much you want to give to keep the business alive is a really big question, right? So, yeah, I think they're important. I think they're critical. I think they're absolutely a must-have in these days, for sure. So, hope that helps, Chris.
I think that was fantastic. Thank you very much, and thank you everyone. And what I want to do with some of the remaining time, I think would be valuable, is give anyone the opportunity to submit any questions that they might have through, and utilize that chat function, and we'll filter through them and get them answered for you. So please feel free to utilize that chat function. I think I might have seen it, one person driving, listening to us. So if you need to unmute and share or ask a question, feel free. will forgive you this time.
Hey, Kathy, it's Isabel. Can you hear me?
Yes.
Hey, I just wanted to make a comment. Dominic was talking about the contingency plan, and what we worked to get a contingency plan. We actually worked with Dominic for the chamber, and at the time we created a contingency plan was mostly, of course, not thinking about COVID-19, but mostly thinking maybe a slowdown of the economy, or maybe losing a high-tier investor or something like that. So we worked on doing that. What I really like about the contingency plan that I think we tend to forget is you have as Dominic said, you have really a strategic approach. Basically, it tells you this is what you do. If you were to lose X amount of revenue, you do A, B, C. If you were to lose X amount of revenue, you do D, F, other options. But I think it takes also the emotional out of it, because when you are in a sense of stress and difficulty or loss of revenue, sometimes it makes you want to hope they will get better, and you hold on to making decision, and you don't actually make the decision. So the contingency plan really forces you to take the emotion out of it and go, okay, we did say when we reached that, we were going to do this, this, and that. And it really helps drive the business without having emotions that will be impacting negatively the business. So I just want to emphasize that, because I thought that was really, really helpful, and also unites everybody under one umbrella of decision making. That I think is really important. So this is my 2 cents this morning. Thank you all for being here, and thank you to our experts for speaking.
Isabel, that's
Thank you,
great.
Isabel.
I'm glad you brought that up. I always think it's really fascinating when you have people that don't do anything at all. I mean, imagine what happens when we go through a hurricane. What do we do physically? We get water, we get supplies, we board up our houses, we make plans to leave town, we figure out a route to do. We're doing all these things for our physical safety, but when it comes to our business, people don't do absolutely nothing. So imagine going into a hurricane with not preparing for any, you don't have any water, you don't have a generator, you have nothing. Imagine what that would do if you got hit hard. And imagine the emotion of panic that would settle in when you realize, I don't have any water, I don't have any generator, I don't have anything. All the food's gonna spoil. Imagine that just in your business. And that's what people do. There's no contingency plan whatsoever, and they're just gonna fly blind. And what happens is we react to emotion, like Isabel said, and you can't, that's not a good situation to put yourself in, because when you get desperate, you do things that aren't logical. And so I think to echo what everybody's saying is it's really critical to have that sense of command and control over your business during that process, like Dominic mentioned. And so the fact that Dom went through that with Isabel in the chamber, they have a sense of security now that says, okay, we can go down this route and we can leave the emotional elements out of that. And I think that is what it's all about. It's going through the motions that we have a plan. Sometimes you just need a plan. So I just wanted to echo that, and I think the hurricane analogy is always driving it home, because we do that every single year.
That's great, Michael. Thank you very much. And I do like the idea that, and all three of you touched on it, right? That kind of the purging of the emotions that you're going to go through, or getting comfortable with them. I really, really like that. And that definitely hits home in a number of ways, but with their businesses, right? Having that plan, it allows you to go through that. I really appreciate that. I don't see any questions that are coming through. We've got a couple more minutes. I wasn't sure if I just heard someone unmute that had a question. Oh.
Chris, just one last thing I wanted to add about the emotion also. I think it also takes out the embarrassment, because when some business owners are having difficulties, whether it's external or internal or something else happens, it's easy to take it on yourself as saying, oh, it's my fault or this and that. When you have a contingency plan, you're prepared for that ahead of time, and you're more in control. And I think it gives really, as Dominic said, a sense of confidence of the future.
I'll add one thing to that, Isabel, and that is that, you know, now that we've seen some of these contingency plans have to be activated on some level in different entities and clients, what we've learned the most is there are still going to be things that are unforeseen no matter how much you plan for it. So you may have a set of things you have to do, and that takes a big chunk of thought and process out of the game. But believe me, you won't have time to think about those things because there's going to be 10 other new things that are going to be added to your plate that you got to figure out, because it's a different type of thing. It's a COVID thing. We never thought we were going to be worried about the safety of our employees from a virus. Like that wasn't, there's a whole nother game that we're thinking about there that was not in any contingency plan in any client that we've dealt with, right? So you will be consumed. What you're going to be consumed with is critical. Hopefully you're consumed with things that are really challenging head on the issue you're dealing with, like COVID right now. You have time to commit to making sure that your employees are safe. And all the other pieces are just kind of lockstep already loaded and the emotion's gone, like Isabel's saying. It will be a little bit of chaos. And if you cut that half of that chaos out, man, you will rise and succeed. And it'll be almost like a marketing position where you would say, we have risen above COVID. Watch and see how well planned we are, how well we've done. Watch and see, right? It's a business idea and momentum that takes you to a new level of being a business owner, for sure. But yeah,
I love that, Dominic. You're getting me excited, like inspiring, and I'm ready to go.
All right, good.
So we're coming up on the time to kind of wrap up, and you know, on behalf of the chamber, I really want to thank our panelists. You guys shared a lot of amazing information and some great perspectives. So I really appreciate that. And so let me start by thanking Meghan, Beatty, and Tracie, Cotto of VyStar Credit Union, Michael Scine of Scine CPA Advisors, and Dominic Scine of Scine & Associates LLC. I really appreciate the time that you spent with us today and sharing all your expertise. We also want to give a big shout out to someone behind the scenes, Kamal Gasper, who is our VyStar at Work program manager, who's been working really hard to collaborate with the chamber staff to really develop these financial wellness workshop series. You know, just to make sure that everybody knows, today's discussion was recorded, and that recording will be uploaded on the chamber website for playback at a later date. We do invite you to visit the chamber's website at www.sjcchamber.com. And please follow the chamber on Facebook, LinkedIn, Twitter, Instagram for more information and resources to assist you in your business. Thank you all so much for participating in today's workshop. Stay tuned. This was the second of 3, so we do have one more financial wellness workshop that we've got scheduled for October. So keep an eye out for that. And again, thank you all very much for coming today. We really appreciate it.